Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, June 3rd, 2022. And our top story today, home values in opportunity zones keep pace. Well, joining me now to discuss this and a lot more, Rick Sharga is Executive Vice President for Market Intelligence at Adam. Rick, it's great to see you. Thanks so much for joining us on the program this morning.
Delighted to be here. Thanks for having me.
That's great. And we're going to talk about opportunity zones and housing prices in opportunity zones. Let's start with the basics, though, because many people like myself may not know what an opportunity zone is. So let's define that for the audience.
Yeah, as part of the Tax Reform Act several years ago, the government set aside certain undeveloped or underdeveloped areas across the country where investors could kind of go put money in and save on their capital gains taxes. At a minimum, they get to delay paying those capital gains taxes for up to 10 years. And in a lot of cases, they'll wind up paying less because of some of the nuances of the program. But for people who are curious about this, every state identified which areas within the state would qualify. Typically, those are areas where you had lower income than surrounding areas. You had development that had lagged behind. There were a couple interesting anomalies in the program. There was a place in Oregon where they were building a 5-star Ritz-Carlton hotel in what was supposed to be an opportunity zone. But sometimes the decision on where to put these things was made prior to when the program was actually executed. It's a primarily real estate investor driven program. It doesn't really apply a whole lot to people looking to buy a house and live in it. And we could talk about some of the restrictions that go along with investing in these zones. But overall, it's been a pretty successful program. There have been billions and billions of dollars poured into these communities, and that was the intent of the government program when it was executed.
Well, thanks for defining that, Rick, and I think that helps me. And we do regular shows on commercial real estate and real estate investing, and I think obviously this is an important aspect of that. Let's talk about inflation, and I guess everyone knows about inflation, and we've seen a run-up in gas prices, we've seen a run-up in food prices, supply chain disruption, but we've also seen housing prices increase year over year for the past several years in traditional areas, residences, commercial real estate, et cetera. What has been the impact, based on your curated information at Adam, on opportunity zones around housing?
Well, that's a great question. If you look at home prices, and you just mentioned how rapidly they've been increasing, on a year-over-year basis for over 120 consecutive months now. This is, I believe, the longest steady run-up of home prices on a year-over-year basis in history. And so recently, in the last couple of years, they've been going up somewhere between 17 and 20% on a year-over-year basis, depending on where you live. Opportunity zones were areas where typically home prices wouldn't keep pace with price appreciation in other areas, in other neighborhoods. And one of the things that leads me to believe the Opportunity Zone program has been successful is that last year, for the first time, we saw in those areas home price appreciation kept pace with the rest of the country. So on the one hand, that's not great news for home buyers because everything gets more expensive, tougher to qualify for a loan, tougher to make those monthly payments. But if you happen to be a homeowner in one of those opportunity zones, you are no longer lagging behind your neighbors who were in other communities outside the zones. So it's an indication that the investment that's been put into those communities has really started to raise the bar and do exactly what the program was intended to do, which was to build up those underserved communities and give them a chance at participating in the same kind of growth that we're seeing elsewhere.
And again, I mean that is amazing. That is keeping pace. And I guess I want to understand. You mentioned what if there's first-time home buyers looking to buy in that area? And one of the challenges I think first-time home buyers have in traditional non-opportunity zones, however you want to decide, traditional areas, is that look, you got to have a great credit score, you got to have a lot of cash, you got to be able to make the down payment, you got to be able to afford it. Does that bode not well if people want to buy that house? I mean, it's great. I love the fact that the houses are appreciating, but I often worry about people coming behind and buying homes, new homes, or are they going to have to rent?
Yeah, it's a really, really tough market to be a first-time home buyer in. I've been in this industry probably for about 25 years now, and I really don't recall a time when it was harder to be a first-time home buyer than it is today. And in fact, normally about 40% of home sales are to first-time home buyers. Right now, we're at about 25%. So that just kind of gives you an idea of the degree of difficulty those first-time buyers face. I live in California. The median price of a home that's sold in California right now is somewhere between $800,000 and $850,000. I have no idea how my kids will ever be able to afford to buy a house when you're starting out at that kind of number. So
Yeah.
the opportunity zone areas, because they're coming from a lower price point, might still represent an opportunity for first-time buyers to be able to go in, find a property, and afford to buy it. There isn't a lot of inventory available at the low end of the market at that entry-level housing point. So looking at an opportunity zone as an area where you might be able to find an affordable house isn't really a bad idea. The reality is I don't think most buyers, especially most first-time buyers, will want to do the research, identify an opportunity zone, then go look there. I think really the way to do it is to start with what you can afford and then find the houses that are priced appropriately for what your budget is. Some of them will happen to be in opportunity zones. But the good news is if you do happen to be buying in one of those zones, there's enough investment activity going on that you can be more certain than you might have been otherwise that area is going to continue to appreciate and do better in future years than it has in the past.
Rick, let's talk a little bit about interest rates. The Federal Reserve raising rates, noting that obviously with the inflation, trying to tamp that down with rate cuts, rate increases. Excuse me. Don't want to get no more money, please. Rate cuts. But let's talk about the impact in these opportunity zones of the rate increases. What does that mean for the opportunity zone in terms of the mortgage rate, but also maybe investment? Does it improve? Does it enhance the investment or the desire to invest in these areas?
Yeah, that's a really good question, and most people haven't tried to connect those dots that I've been speaking with. So give me a second to gather my thoughts.
Sure.
The rate increases that we're seeing, some people believe is a conscious effort from the Federal Reserve to slow down the housing market because you can't have 20% year over year price appreciation indefinitely without getting into a housing bubble. And we probably all remember how badly that ended when we had one back in 2008. So that appears to be already having an impact. When we saw interest rates go from 2.5% last year to 5% this year, we're starting to see signs that demand is weakening. And as demand weakens, your sales numbers go down. We're already seeing that. And as sales numbers go down, ultimately prices plateau and may even correct a little bit in certain markets that maybe were overheated a year ago. Everything I just said applies across the board, not just in opportunity zones, but also in more traditional markets. And in the opportunity zone area, when you're talking about investors, investors typically pay a higher interest rate on a property purchase loan than an owner occupant does. Commercial loans typically have higher interest rates than consumer loans on those kind of purchases. The reality is that a lot of the investors buying these opportunity zones are buying with cash. They're putting funds together, and so they're not really mortgaging or financing the purchase in these zones. To a certain extent, the fact that rates are going up actually puts investors using cash in a stronger competitive position because they're now competing with a consumer perhaps to buy a property where the consumer is looking at a higher hurdle because of those interest rates going up. And candidly, I don't see those rates coming down anytime soon. So I think that there will be a minimal impact in terms of opportunity zone property purchases. I think the more direct impact, the more significant impact is going to be on existing home sales and new home sales pretty much across the board as affordability becomes more of an issue and demand weakens from people who are probably going to rent for a while now rather than buy.
Rick, I need to take a very quick break. When we come back, we'll talk more about what's next for opportunity zones. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you over 50? Would you like to get up to 33% more income in retirement? Then call now for this free book, Annuity Do's and Don'ts for Baby Boomers. This free book reveals little-known secrets about annuity strategies that will help you make the right choices before buying an annuity. Call right now for your free book, and as a bonus, we'll also throw in a free annuity rate report, both absolutely free for calling Annuity General today.
Call 800-504-8194.
Welcome back. We're talking to Rick Sharga of Adam. Rick, thanks so much for staying with us this morning.
Enjoying the conversation. Let's keep it going.
Yeah, this is a great conversation. I think it's one probably a lot of people are not aware about. They probably heard about the Tax Reform Act and opportunity zones, but they may not be aware of just how these zones are keeping pace for investors. Rick, I want to ask you about the future. What does the future hold for these opportunity zones? You mentioned interest rate increases, but is there still, even based on the capital gains, I guess the less capital gain distribution or the taxation around capital gains, is there still an incentive for investors? And what do you expect to potentially happen in the future?
There's a lot of discussion in Washington about extending the program because the initial results really have been pretty positive. So I wouldn't be surprised that the current program is set to expire, I believe, in 2026. But I wouldn't be surprised if we see an extension. I also wouldn't be surprised if we don't see a change in what's classified as an opportunity zone in various states as the state governments have a chance to reassess what areas really do need fresh capital deployed, new investment opportunities. There's a lot of opportunities for people who are looking to leverage their capital gains taxes, or not leverage their capital gains taxes, but to try and mitigate their capital gains taxes by putting profits into these opportunity zone funds and buying different types of properties. Typically, these are commercial property investments. And that can include multifamily dwellings, apartment buildings. It can include warehouse and distribution centers. It can include retail. It can include office buildings. It can even technically include a single family home that's converted into a rental property. But one of the things people investing in these zones need to remember is that there are criteria you need to meet once you've made an investment. And one of those is within a certain period of time, you're expected to double the value of the property that you purchased. So the notion is you're not just going to go in and buy a property, but you're going to enhance that property. Land costs being pretty much a given, what you're really talking about then is doubling the value of the structure that's on top of that land. And that's, again, one of the reasons why these programs were really generated in the first place, was to come into these underserved kind of rundown areas and improve them, and do it in a way that incents people who have made a lot of money on prior investments to put their money into these zones. So there's lots of opportunities for investors to play in these markets. I don't think that's going to go away anytime soon. The government really does seem pretty pleased with the general success of the program, and I think we'll continue to run it as long as it performs the way it has.
Yeah, let me ask you about and I should have asked you this at the beginning of the segment, but I just thought about it. The investor profile. I mean, as you're describing these opportunity zones, and I think you mentioned it's maybe more institutional. Is it foundations, endowments, pension funds, multifamily offices, or companies like an Amazon or a Google? I don't know. Someone who has a foundational element of their business. Who is fits the investor profile for these opportunity zones?
Well, on the one hand, you're not seeing a lot of individual investors going in solo and trying to navigate this process. It is a program that runs through the IRS. You can find information on what are called QOZs, Qualified Opportunity Zones, on the IRS website, and it'll walk you through the programs. But in order to invest in these properties in an opportunity zone, you need to create a fund, which is something that most individual investors either can't do or wouldn't know how to do. So you do see individual investors participating in these funds, working with somebody who more or less acts as a broker and accumulates funds from various investors. It's not so much foundations in the notion of philanthropic organizations. It is more for-profit entities coming on board, but you mentioned a couple that are typical contributors. You could have pension funds, you could have other institutional investments, hedge funds, private equity funds. A couple things to keep in mind. One, again, that the main benefit here is what it does to your capital gains. So this is not the kind of investment opportunity where you're looking to necessarily get high returns on dollars invested, although that's a side benefit that may actually happen anyway. And it's a longer term hold. In order to maximize the benefits to your capital gains, you typically need to stay in these programs for up to 10 years. So if you're an investor looking to be in and out of a fund in 3 to 5 years, probably not a really good play for you. If you're okay with a longer term hold, and if you have capital gains taxes you'd rather defer and hopefully reduce, then it's a better play for you. And again, you want to look for information on the IRS website about how to find some of the companies that are putting these funds together and participate that way.
Yeah, so it sounds more of a, like you said, it's a long-term investment. This wouldn't be like HGTV, flip the house, and next thing you know, you move on to the next thing, right? I mean, this is really an investment for the long term, both for the opportunity zone, but also for the holder. And I think people need to be, if you're an investor, you need to understand that. Oh, absolutely.
And if you're an individual investor getting close to retirement age, and 10 years could be way too long on the time horizon for you, it's a very real consideration. And I love the HGTV shows, the fix and flip genre. That's not an opportunity zone play. It candidly isn't much like what most fix and flippers go through in real life either. But no, this is for people, again, who have capital gains taxes they're trying to manage, and are looking at a longer term horizon and are comfortable taking on some risk because you're going into an underserved, underdeveloped community. That does come with risks inherent to it, and this is not a fail-safe investment option by any means.
Yeah. Well, Rick, we're going to have to leave it there. Really interesting conversation. Sounds like a very successful, at least from the outside looking in, government program. Great to see you. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
Look forward to doing that, Jeffrey. Take care.
And that wraps up this episode of BRN AM. Have a topic of interest, somebody you think we should talk to, drop us a line. And don't forget, for all the latest security news and lifestyle, wellness, finance, tech, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, or visit our website and also our streaming partners. We're back again tomorrow for another edition of BRN Weekly. We'll be taking a look back at some of our best segments for the week. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
But if you're tired of the same old stuff,
Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.